Welcome back to CryptosRus. I'm your resident DeFi guy, Aaron, Aaron, or if you're Australian, you can call me Azza. But today I'd like to get into DeFi options. I used to be a TradFi options trader, and this is one of the things that I like particularly about the crypto space is being able to use TradFi mechanisms inside of DeFi. And today I'd like to get into the options platforms available on Ethereum, Arbitrum, and Optimism. And we're going to start in DeFi Llama, guys. So I like to start in DeFi Llama as it is, if you've watched some of my other videos, it's a place where DeFi is aggregated and it's all on-chain data. So you get up-to-date data. All the protocols need to do is register with DeFi Llama, and they get their contracts read on-chain, aggregated here. So if you go to DeFi and then go to, I believe it's categories, you can click on options and this will show up here. This is the options platforms available on chain that are registered with DeFi Llama. And most of them are multi-chain. In fact, if you hover over them, you get to see which chains are available for each one. I particularly like to use Arbitrum and Optimism for my DeFi usage because gas fees are a lot lower than the Ethereum chain. However, I do want to show you one option available on the Ethereum chain for those of you who don't want to venture off Ethereum mainnet too much, where transaction fees are actually rather low. In fact, there are no transaction fees after you submit your USDC into the application. And that's Avo in particular. We'll get there in just a second, but I wanted to start here because it shows the popularity basically of these options platforms based on their total value locked, or TVL, over here. So Lyra Finance is the tops here with 24 million. And Ribbon Finance being one of the first that I got into particularly. We'll talk about that as well. And then there's Buffer Finance, where I actually provide liquidity to the traders in order to make yield there. So let's start with Ribbon Finance, as they were kind of the OG in the last cycle. Though they have many different options for their products, this covered call strategy is their bread and butter on their vaults, guys. And so these are vaults. You do put your assets into them in order to make these strategies work. So I've been using the ETH and wrapped staked ETH versions of this vault since for really the last 2-3 years. And I've gotten it in and out depending where the strike prices ended up. In Ribbon's covered call vaults in particular, you deposit into them before Friday when the contracts are minted, and then the next Friday is the expiry. So you get to see a little bit ahead of time. You get to do some research ahead of time. Where do you think the strike price is going to end up? The struggle for me with Ribbon Finance in particular is you don't get to set the strike price. The platform does for you. So if you're a traditional options trader, you are used to setting your own strike prices, and this is not something you can do inside of Ribbon on this particular product. So what they have done is actually built out a full order book related platform called Avo. This is Ribbon's product. They launched it this year, and I think this is the most analogous to TradFi trading that you can find on chain, especially on the Ethereum network. In fact, both of these are in their covered call strategies are mainly based in Ethereum network. You see Binance chain as well as AVAX chain options, and they actually do one of the few that does Solana as well. So if you're a Solana holder, you can do some Solana options trading inside of those vaults back on Ribbon. But in Avo, Ribbon's TradFi analogous trading platform, you get the option to set your strike prices, and it functions a lot more like traditional finance options. So I'm pretty happy in this platform. And another exciting thing about this platform is that you don't pay any transaction fees after you move your USDC into the protocol. So you have basically a bridging fee, if you will, bringing the assets into this platform. But once you have your USDC in the platform, you can trade and trade and trade and not generate any gas fees. Now let's move on to Lyra Finance, as it is the most used right now and has the highest TVL, or total value locked. This one actually has two modes, and I think this is why it's gotten pretty popular. There's a simple mode and the advanced mode. On Lyra Finance, just like on Avo, you have the option to choose between Ethereum and Bitcoin. And you also have the option to use this on Arbitrum and Optimism chains. So you're not trading Arbitrum tokens or Optimism tokens, you're choosing the chain that's the most desirable for you that you can connect your wallet to. Both of these are optimistic rollups, meaning that you have their layer 2s of Ethereum and they're gonna have less gas fees. In fact, a transaction on either of these networks is going to cost you less than $1 per transaction, where on mainnet Ethereum, you're going to spend upwards of $3 to $5 per transaction, possibly more for different options contracts. So I like to stick on Arbitrum and Optimism, in particular for the gas fees. Lyra Finance is a great place to start, especially if you're a beginner to options, because they have the simple mode. I think it's pretty interesting. It gives you the breakdowns of your break evens, your prices to get into the options here. You can sell and buy calls and puts, which is great, but I think the advanced mode will cater to those like myself who have some TradFi options experience, and you get to see some of the bid and ask prices as well, which is more familiar for those of you who are into TradFi options. It is nice to see at least the delta listed inside of Lyra Finance. You get your Vegas, your Gammas, your Thetas as well, so you get all those Greeks that you might be used to as an options trader in traditional finance. Now I want to talk about two more options platforms on Arbitrum in particular, again for the gas fees, but also these are novel products that I think are interesting to those who are in options. Some people in TradFi use options to hedge against their long positions. If they're doing some sort of leverage long or even just a single long trade, you could go delta neutral by opening up the opposite contract in an options platform. And Buffer Finance in particular is one of those who tries to capitalize on this. These are open for very short periods of time, and you get to choose your time limit here and how much you want to invest, which is pretty interesting in regards to options. Most options have a weekly expiry, maybe a daily expiry, but this one has as little as 5 minutes as your expiry. So if you're in a trade, say on GMX or another trading platform on chain and want to hedge your position, you can actually take out an option position in the opposite direction on something like Buffer Finance. Now, Buffer Finance also gives you the option to earn as a liquidity provider, which I think is interesting. I've made a video or two in the earning side of GMX or trading platforms like GMX as a liquidity provider. This doesn't have a typical order book style options platform. Your counterparty is actually the liquidity providers rather than somebody selling you their options. And last but not least, a very, very interesting platform is Y2K Finance. Y2K Finance actually sells insurance for depegging events. So many of you may be aware of the depegging event we had in USDC, where some of the banks closed in the US and some of the lending to those crypto platforms, in particular Square, was possibly bank run upon, right? So the backing of the USDC coin was in peril, and we saw the peg actually drop to a point where on Y2K, if you were in one of the contracts, you could have made back your money in insurance and then rode that position back up. So Y2K sells insurance to those who want to make sure their assets stay pegged to their underlying. So their different assets are USDC, USDT. They do some other stable coins as well, but they also offer peg insurance for wrap staked ETH. I believe RETH is another one that they give the option for you to buy insurance on as well. But on the other side, as the seller of the insurance is essentially like a options contract. So I wanted to mention it in this video, as it is more like a straddle in traditional finance, where you're hoping that the price of the asset does not go above or below a threshold that is set by the platform. Y2K Finance is one of the protocols that I'm actually invested in the Arbitrum ecosystem, because I think they give great yield on selling insurance and actually add great yields to your ETH bags in the process. With that, thank you so much for watching DeFi on CryptosRus. My name is Aaron. Please feel free to add any questions that you might have in the comments. Like, subscribe, hit the notification bell for more content just like this. Follow me on Twitter at All Things ETH, and I hope to see you in the next one. God bless.